All right, folks. Tim Davis here coming to you guys with another weekly market review. Want to get this out the way early because I got a lot of things going on this weekend, and the market has really been showing its ugly head over this past couple weeks. Today is Saturday. I'm sorry, today is Sunday now. Sunday, October the 2nd, 2022. And here is a daily chart of our S&P 500. Want to be taking a look at a lot of different time frames and a couple of different scenarios to show you guys what is unfolding before us as we continue to navigate through this bear market. And the bears have really showed their head over this past month, and I think we're in store for a lot more pain in the near future. So looking at this daily chart of the S&P, point out a couple things, and then we're going to take a deeper look into the bigger picture by taking a look at the monthly chart as we towards the end of this presentation. So here I'm going to highlight the June lows, and as we got that nice ricochet to the upside on those June lows. And if you've been following me, said eventually I think we're going to come back to test these June lows. And if we don't find a way to get a significant snapback off of those June lows, then we could be in store for a major or much, much bigger pullback. So as we reached a pretty much pivot point on those June lows, we started to pull back around the beginning of August. And as you can see, the 20-period moving average has been acting as a perfect area of resistance for price action since we have reached the high after the high of the June lows around beginning of August. We reached the pivot point. And since then, price action has been trickling down, down, until we got back to the area of the June lows. Now, what the markets really what the bulls really needed to see is a huge bounce, rally from this point. Look at that. They did not get it. We actually dropped below the June lows last week. That is not a good sign for the bulls at all. So what are the possibilities? Well, possibilities we could see much lower prices. And I do mean much lower prices. It's a huge possibility as we head into October, which could be an historical red October month. So we had to see how that pans out. But if for some reason for next week, if we don't get this bounce back above the June lows, which I don't think we're going to see much of a bounce, if any, the 20-period moving average is coming down, which is going to act as an area of resistance. And we have already broken below the June lows. So former support now becomes a level of resistance. So if we get a bounce, we could get a slight bounce, not much at all, and then come right back down to continue this move lower. So we had to see how things pan out next week. But I think the bears got their teeth sunk into this market, and I think we're about to see some drastic moves lower. So any bounce could be sold off immediately. That's what the daily chart looks like on the S&P. Again, we have already broken below those June lows, and a lot of the selling pressure is starting to really pick up. So don't see any bright future here for a bullish narrative for stocks. All right, let's take a look at the Dow Jones daily chart. Here's a look at the Dow Jones daily chart. Same thing. We have the June lows, and then we have a pivot off the June lows, and we march higher. And now we're right back to the June lows, and the Dow Jones even dropped below the June lows a lot quicker. Try to establish some type of some type of support level here, but failed and went lower. So this is definitely now becoming a level of resistance. So previous support is now definitely resistance on a Dow. So if we get a bounce, don't expect to go much higher. We'll probably test that level of resistance and go lower. So again, 20 per moving average is going to act as a level of resistance as we continue to trickle down. So we are not going much lower, much higher, folks. We're going to continue to see these markets find a way to melt lower. Let's take a look at the Nasdaq. Daily chart on the Nasdaq. And this is very interesting because I think the Nasdaq is really about to see a washout in a major way. So now the Nasdaq, same scenario, a lot of negativity in this market, folks. Nasdaq is pressing. Here is our June lows. We got that bounce, and we're right back to that level. So on the Nasdaq, this line, this solid line you see me have drawn here, that's the support level from the June lows. And I have a line drawn here, which is gonna this dash line, which is acting as a diagonal support level. And I do think we're going to end up breaking these June lows on the Nasdaq. I think we're going to race towards that diagonal support. So I want to show you guys something here. I'll show you guys something here in a second here. As it relates to this Nasdaq. And I'm going to bounce around here with the Nasdaq for a second because I want to point out something and make a point. Let's switch to a weekly chart of the Nasdaq. So on the Nasdaq, look at this weekly chart, you'll see the yellow line, which is my 20 per moving average. It just acts as a strong level of resistance. Try to get a little bounce here and hit that 20 per moving average. You can right back down. Now we're ready to test the June lows. And with the full stochastics having a looking like it's having a strong move downward, wins percentage and RSI. If we don't get a bounce here off of this level next week, I can see the Nasdaq really dropping straight down to that diagonal support before making a bounce and an attempt to test that the June lows as an area of resistance. So next week is going to be very, very critical for the Nasdaq. I think. I think if we get a bounce where we are now, 20 per moving average is going to act as an level of resistance. So it won't be short. I mean, it won't be a long bounce. But if we don't get a bounce here, we could see price action just drop to that diagonal support before we get that move higher. Again, no matter what type of reversal or rally we see in the market, it's going to be met quickly with some level of resistance and then eventually get rejected. Same way the June lows did, believe it or not. The June was, everybody fell in love with that rally, but look, ran into that resistance level after about a month and it just fell right back down. I don't think we're nowhere near the end of this bear market. So we haven't seen capitulation yet, folks. Capitulation is when everybody's going to be selling everything for various reasons. I think we're getting close to that point, but we're nowhere near there yet. And when we see capitulation, we're really going to see a really steep sell-off in markets. And I'm going to show you how that looks on a monthly chart here in a second. That's what I expect to see on the Nasdaq. Now let's go back to a daily chart. So we took a look at the Dow Jones, right? Look at Dow Jones. Yeah, so we looked at the Dow, we looked at the Nasdaq, and looked at the S&P. Look at the Russell real quick. Same scenario on the Russell, back at those June lows. So it's trying to make a stand. Don't think it's gonna win this stand. I think Russell's gonna do the same thing, break those June lows and continue lower. June low, we got as low as 1641. And that Friday we closed Russell at 1664. So that's the price action look for next week, 1641. If we drop below that, probably see a significant sell-off in the Russell. Take a look at a daily chart on the VIX. Now, VIX looks very interesting, folks, because like I said last week, VIX was in a range. VIX was in this range. And I said if we break above this range, and all bets are off, and we can see a VIX really take off. So that was the range that I was looking at. And look what happened, folks. We bounced right above that range. But look what happened. Up to close to 35, and that's what I ultimate level. I said we would reach first level around 35. We did that. We did that close to 30, between 34 and 35. Then that was a level of resistance. That was a near-term level of resistance. Price action really reversed in a big way. This big red candle. Price action reverse. But where to? Back to support. Previous resistance. This was previous resistance here. Only become support. Look where we at. Right back to area of support now. So the big question is, does the VIX hold the support level and start to march higher again? Or do we break the support level and go lower? I think the more likely scenario is that we hold that level of support and we see a bounce here. That's the more likely scenario. And I think the next bounce will take us above 35. So we have to see how that pans out on the VIX in the coming days. One other tool we're going to look at that we have not looked at in a minute is the SPXA, which is pretty much the tool that tracks the overall breadth of the market. And again, if we look at history with the SPXA, I'm going to look at history in a second here. I'm looking at the monthly chart and show you how severe this sell-off is, folks. I think this is the this bear market is shaping up to be all what a lot of folks who haven't been talking about it, but the ones who been telling the truth on and a lot of the folks that I follow online been showing you that this bear market is like one we probably haven't seen in a very long time, and it's shaping up to be that. There's so much negativity in our economy, earnings, and political news, geopolitical news, threats of wars. There's just so much negativity that is putting pressure on this market overall. And it doesn't look like we're starting to get any positive news anytime soon. There's a lot of negativity within our markets, folks. That's going to put pressure on the markets. A lot of negativity out there that's going to put pressure on these markets. So here is a daily chart of this SPXA 200R, which is a tool that tracks the S&P companies that are trading above the 200-day moving average. And right now we have a reading of, look at this, 0.11. So if you guys have been following me all year, I said eventually I think we're going to see this get down to zero, and we're getting very close. So we had a little bounce back up in March. In June. A little bounce back, but quickly dropped right back below the 20 per moving average. Now we're hovering close to this 0.1 or 10th. That means you got 11%, about 11% of S&P 500 companies that are still above the 200-day moving average, and about 90% that are below the 200-day moving average. And I think we're going to hit zero. It's going to happen. Could see that very, very soon. Looking at a weekly chart of this tool. Look at the sharp reversal. Oh, sorry about that, folks. Sorry about that. Look at the sharp reversal. Move up to a level of resistance and boom, sharp reversal back below the 20-pair moving average. And I think we're heading straight down to diagonal support before we possibly see a move higher. So I think we're going to see a temporary sign of what may look like to some folks capitulation, but I think we're going to have a third wave in this bear market after we come down here and get this bounce. We have a short-term rally, and then I think we're going to have the next phase of the bear market that'll start to unfold, which is the third phase, and that could be showing up capitulation. So this next several months is going to be very interesting, folks, as we get close towards the end of this year. But I think we want to see some steeper, some lower lows in the market for sure, and probably some steep lower lows. And I told you my ultimate goal is I think we're going to take out the 2020 lows, and I'm still sticking to the theory. It's a very possible chance we can reach those 2020 lows and possibly even take them out. All right, so that is what the SPXA 200 R looks like. Now let's take a look at it. Before I even move from this tool, I want to show you how severe it looks. I'm looking at a monthly chart. So here's the history, showing you how it looks compared to previous sell-offs or breadth sell-offs. Look how steep we are, folks. Look how steep this monthly chart looks. And then look back to the left and see if you see any time we look this extreme. And it looks like it's just getting worse. It's getting worse. Look at the TTM squeeze, definitely in negative territory. And I look back in history, the closest we've seen that kind of mimics this is between the years of 2007 to 2009. And we got to below zero during that time frame, and we had a big bounce. I think we could see much worse pain now by looking at the way the way these technical tools are shaping up. The full stochastic is definitely reaching some extreme levels to the oversold area on this monthly chart. I don't think it's ready to give up. I don't think it's ready to have a significant bounce yet. Look at the RSI, has not reached oversold yet. 2008, we hit that level on this tool and we got a bounce. We are nowhere near that. It looks like we're starting to turn down, make a sharp turn low on RSI again here. So that tells me that the pain is nowhere near over yet. It looks like we have a good ways to go before we see some signs that this market breadth wants to improve. All right, now let's take a look. Since we're on the monthly charts, now let's bounce back. Take a look at a monthly chart on the VIX. And I just see the opposite of the markets. Now look at this. Folks, the VIX is really heating up, folks, in a big way. And I think we're in store to see a huge rally in the VIX, folks, over probably last months. We had to see how this pans out. But look at the TTM squeeze, just starting to get some positive reaction on above the zero line on the TTM squeeze on the monthly chart. Look at the full stochastics starting to turn positive again. Look at that crossover here. Green crossing back over red in a big way, starting to point straight up. Look at the wins percentage. Hit the oversold territory at one point. Then it's on a move up, starting to bounce back up in a big way. And RSI on the monthly chart starting to turn positive, trying to turn back up. So with the monthly chart showing strength in the VIX, folks, that just tells me that the VIX is about to really show some very, very strong strength to the upside, and that could last for several months. So if that is what the monthly chart is showing on the VIX, and that means it's the opposite on the S&P, because the VIX is normally correlated to the S&P. So and you can see this perfect formation over the past, couple years in the VIX. We got that big push in 2020, then we sold off, but it just like making almost like a cup formation. It's just starting to curl right back up over the past couple years on the monthly chart. Came down in the valleys, starting to curl right back up and starting to march higher again on the monthly chart. So that is not encouraging for our overall markets, folks. This bear market is really starting to sink its teeth. teeth into price action. And recession, folks. Whoever said we're not in recession or can't see that we're definitely in a recession. You know, I don't know what rock they didn't crawl under, but I think we definitely are in some type of recession, and this may go much more deeper than what folks believe or think. So that's what the monthly chart looks like on the VIX. Take a look at the monthly chart on the S&P 500. And this looks even more devastating, folks. Now, here's our monthly chart on the S&P 500. And what I want to point out is the levels that you see me have marked on my screen, okay? So here is the solid line represents the level that we reached in 2020 before we had this big sell-off. Okay, the dashed line represents the June lows and where we are now as it relates to the June lows. Look what happened, folks, with the 20 per moving average monthly chart. Price action traded down beginning of 2022, tested this 20 per moving average, used it as a level of support, slight bounce, a couple bounces here. Then we broke below this 20 per moving average. Now look what price action is doing. It's staying muted. Low this 20 per moving average, and look at the 20 per moving average on the monthly chart, folks. It's starting to curve and go lower. That is putting pressure on price action. And it's the 20 per moving average is acting as a level resistant and is pushing price closer and closer towards this solid line, which will represent the highs that we see in the 2020. And I think we are going to drop below that, folks, probably very soon, looks like, in a significant fashion, and start to head towards the 2020 lows. Yes, folks, I think we are getting ready to get into that territory. Probably won't see a straight line down, but I think we're going to hit below this level and maybe see some type of zigzag motion until we ultimately reach this bottom. That could last for the next couple months, maybe. That's how it works out. Maybe the next year, or it could happen sooner, folks. I mean, I think ultimately that is the target. How it plays out, we have to wait and see. But I think the bulls have no footing in this market. The bears are in straight control, and it will be until we see some positivity in economic news, political news, geopolitical news. Until we start to see some positivity, CPI data, inflation data. Until we start to get some positivity, folks, markets are in a lot of trouble. All right, so. Let me see. Let's do this. Figure this out. So that's our monthly chart on monthly chart here on the S&P. Hate to be a bearer of bad news for all you bullish folks, but there's no bullishness in sight in this market, folks. And it looks like it's just starting to get worse with monthly chart starting to hit some serious levels of resistance and get rejected and push lower. And once we cross into this territory here that where we started to trend lower in 2020, all bets are off as to how this sell-off happens, and nobody knows. I don't think we're going higher to no new highs anytime soon, and we may be in this territory for a long time. Let's look at a monthly chart of the Dow Jones. Same scenario. I mean, look at the RSI. We are nowhere near it. RSI is yet to catch up with price action and other indicators. RSI is not even in oversold territory on the monthly chart, and I think that's where RSI is headed. So 2023, we could definitely see RSI into oversold territory, and we could stay there for a minute, folks. I mean, the monthly chart is really what I'm focusing on, folks. Until we see some positivity in this monthly chart, folks, all bets are off. Look at the volume starting to pick up too as price action is starting to fall. On a monthly chart, look at the volume starting to pick up. That's a negative sign for markets. As prices fall, it's starting to fall. The volume is starting to pick up. Negative volume starting to pick up. That is a definite bearish signal. So I do think we're going to see oversold territory on the monthly chart on RSI, and we are nowhere near there yet. So, and here is a monthly chart of the Dow, and we are already dipping below where we already dipping below the highs of 2020 on the Dow. So the Dow is a precursor already, folks. Look at that. So the Dow, here's our high in 2020 before we reversed. Where are we at now? We dropping below that already on the Dow. So the Dow is already ready to start to head towards 2020 lows. We're already in that territory. We're starting to break below the highs of 2020, and we're starting to be in this territory where we were in 2020. So, folks, things I just say, just hold on tight, batten down the hatches. It's like, you know, this sell-off is probably about to intensify. And so for those who are long in this market, if you don't know how to play this to take advantage of a bearish market, you really need to learn now, because that's a way that you can, you know, for those who are holding for the long term, this is a way that you can see increases in your portfolio without seeing a total washout and waiting for a rebound. And I continue to harp on that, folks, because who knows how long it could take markets to rebound for whatever is in store for us. You know, if we look at history, it could take a long time. If you were someone who started buying stocks in this area up here, folks, it could take a very long time for you to get back to break even. And that's why I try to harp on people who are buying hold investors in this type of environment. Look at history. Look how long it took for you know, for the back in 2000. Let's see if I can go back to that level. Here's a bigger, a better picture of what we are looking at. This is a historical chart, a monthly historical view of the monthly chart of the Dow Jones, and I'm gonna point out something here. And this is the monthly chart. So we got into oversold territory in 2008 on a monthly chart before we seen a significant bounce and went higher. RSI right now is headed that way, but we're not in oversold territory. Look at that. Headed that way, but we haven't hit the level yet. And I think we're going to hit that oversold territory. Now, if I was to point out something here, as far as how long did it take for folks who saw this sell-off here in 20 and back in 2000. So here was a sell-off in 2000. And I'm going to draw a straight line across to where their break even would have been. Okay, so the folks who bought at the top here in 2000, they started to break even right around July of 2005. But if they continue to hold on, look what happened. Price actually went up just a tad, and then we dropped even lower. So ultimately, those folks, they didn't get out then when they had the opportunity to do so. So if they didn't get out then when they had the opportunity to do so, and around 2005, price actually went higher, 2005 up to about 2007. Then we went much lower. So if they continue to hold on, it took them until around 2013. It took them almost 13 years, even longer than that. So if I was to go here around about April around 2011, went lower again, they didn't really break even and start to see some realized gains until about 2013. So it took about 13 years from 2000 before folks who bought at the top in 2000 to see some nice realized gains. We didn't start to really get higher in a significant way until about 2013, and then they start to see some realized gains. So what I like to point it out, because folks that are constantly buying in this market right now, what if it takes 13 years for you to get back to break even? I don't know about you folks, but you know, I'm not a young head anymore. I don't have time to wait 13 years to see some realized gains. So why not learn how to play this market in the downside? Why not learn how to see some realized gains in a down market? Why not learn how to trade a down market and make money while stocks are dropping? You can do that by either becoming a short seller, or if you don't, if that's not your forte, learn how to use put option strategies or different option strategies to get increases in your portfolio as the market drops. That way, you don't have to wait 13 years to see an increase in your portfolio. Just food for thought, folks. One last thing before I get out of here. So you see how devastating this looks, folks, in the monthly chart. Look at that. We are definitely see a nice solid candle here, almost a solid candle. Nice long body, dropping below the highs of 2020 already on the Dow Jones. Look at the Russell monthly chart. Same scenario. RSI nowhere near oversold on a monthly chart, and we are starting to hit this level where we seen in 2020 before stocks sold off. If we break below that level, we're going to see probably a quick move or a serious sell-off. Who knows how long that's going to last? But right now, 20-period moving average is acting as a strong area of resistance, and price action is not having any luck at pushing back above that 20-period moving average, which means 20-period moving average is going to continue to be a resistance and push stocks much lower as we continue to go through the rest of this year. All right, one last tool we take a look at. So if you friends with me on Twitter, I keep this pinned to the front of my Twitter page and make it easier for you to access this. This shows the new 52-week highs and lows on this Wall Street Journal tool as it relates to the New York Stock Exchange and the Nasdaq. And this also can give you insight week to week of how stocks are faring, you know, as far as a quick snippet of the overall breadth of the market. So looking at the New York Stock Exchange, it shows us that as of Friday close, we created 5 new 52-week highs. At least there were some highs that were being created, but look at the lows. 486 new lows. That shows you that the bears are definitely in control of this market, folks. Many more highs. I mean, that ratio is outstanding. It's a crazy ratio. What about the Nasdaq? Nasdaq, a little bit better, 45 new highs. So is it more than the new lows? Let's see. Let's scroll down. Not quite. 591 new lows. So again, folks, the bears are definitely in control of this market. Don't try to be a hero. Don't try to catch a falling knife. Learn how to play this market to the downside so you can continue to see profit in your portfolio. All right, folks, this was a little long, but I wanted to stress how severe this bear market is, folks, and wanted to point out some things. Bat down the hatches, be careful, and I wish you much trading success. And what I'm want to probably start to try to do for some folks is start to show you guys some of the bearish trades that I've been in for quite a while. If you're interested in some of those bearish trades that I've been in and new things that I'm looking at, shoot me a direct message and on my Twitter account, or for those who are in the Discord that I'm in, you guys know who I'm talking to. Shoot me a message there, and I'll start posting some of those bearish trades that I'm in, just to give you some general idea of where I've been placing my bearish bets. All right, folks, until the next video, Tim Davis here. I'll be signing off. Enjoy the rest of your weekend, and I'll catch up with you guys later during the week.